So, are you employed? This video today, we're going to talk about the importance of building your own benefits, even if you already have your employer-sponsored benefits. So the benefits it is that you have, number one, it could be medical cover. That's the most common one. We could also have your retirement plan. Some people even have group life cover. But why exactly do you need to set up a plan for yourself? A few years ago, I was honored to work with one gentleman. Let's call him John. John was a senior executive in one of the top firms here in Kenya. And because of his hard work and dedication, he was able to get to the C-suite level, like the top of the top, creme de la creme. But then one day, there was this announcement that there was going to be a retrenchment that is taking place because things were not going so well. And unfortunately, John lost his job. And you have to understand, by him losing his job, what else did he lose? Not only did he lose the salary that he got every single month, he lost the benefits that came with the job. The benefits of such a level executive or very good medical insurance. Actually, he had good international cover. He had very good group life insurance. He had very good pension plan. But the catch was, the moment you are no longer working, all these benefits disappear. And this is when now John realized that he had absolutely no safety net other than what his employer provided, because immediately he lost his job because he had not even put aside an emergency fund. Things just started going downhill. So you can imagine, based on where he is at, the place it is that he goes to work, the place that he actually takes his children to school, where it is that he lives, things had to change, and it brought in so much strain to the family because the lifestyle had to change because he had no money. The money had just ended and he had no liquidity at all. So between the time John went through this predicament to the time he got his next job was a very, very dark time. So he had at that point to depend on his wife, and his children had to change schools at that point because his wife was not able to cater for everything. And that is when now he came to us to help him craft his own protection plan, to craft his own benefits, because he knew that anything could happen at any time. It's not good to be too comfortable with what your employer gives you, because again, what happens when you're no longer with them? So we are going to go deeper into how you, even when you're employed, where it is that you're at, how you can build your own benefits for where it is that you're at now, even if you're not planning to change employment anytime soon, or maybe in the future life could change and you could transition into entrepreneurship or being a staying-at-home parent. So we're talking about building your own benefits, but how exactly does that look like? What are the exact tools that go into this goes into this portfolio? So let's even first start with what you might have currently with your employer. The most common one is medical insurance. There's usually group medical that, at least in the case of a medical emergency, whether you're sick or get into an accident, that medical insurance will pay out. That is the most common benefit that is there. Then the other one that we have is not as common, but there are some employers who offer it, is private pension. Remember, NSSF is compulsory across, but not all employers give pension, the employer-sponsored pension. So for the people who have employers who give them this pension, it's them contributing, or you and them contributing towards this pension pot, which is going to take care of you when you retire. So how it usually works, the employer does give an amount, and then you can choose also to top up so that now your pension pot can grow. And then upon retirement, you can have access to income for the rest of your life. And then number 3, we have group life. Again, not all employers offer this, but it's also something that is very, very important. So what a group life cover does is it does pay out in the case of a death of an employee. So when an employee dies, remember the family is going to be really, really affected because they were contributing an income into the household. But then when one dies, the income stops. But again, the bills don't stop. So what some employers do, they do offer this group life where in the case and one of the employee dies, there's going to be a payout to the family. So that means there's usually a payout of around 3 to 5 times worth of your annual income that is going to be paid out to the family. It's important also to note that when you stop working, you cannot move with the group life. Yeah, not like now the group pension. Group pension, you can actually transfer it from yourself to your own personal pension plan. But when you leave a workplace and you had group life, you cannot transition with it because the group life belongs to the employer and you only are covered when you are employed. And then we have, say, your off days. So, even if you have your off days at work, you still get compensated. Usually it's about 21 days worth of a break. And this level of compensation. But again, you have to ask yourself, okay, when this job stops, because again, as life happens, we never know what could go on. Do you have some sort of liquidity in the form of an emergency plan that can take care of this situation? So it is good to be grateful for the employment and the employment benefits that you have, but it's equally your responsibility to make sure that you have your own plan on the side that is not attached to your employer, knowing that no matter what happens to this company, no matter what happens to you in connection to this company, you have something you can call your own. So let's go back to that again. We have there's the medical insurance, there's the pension plan, we have the life cover, and we still have the emergency fund. And then we're going to go deeper into maybe other tools that are additional you could use when it comes to now building your own portfolio just to make sure that it's rock solid. So what is the benefit? What is the importance of having your own benefits aside from what your employer offers you? Number one is increased flexibility and control. When you have your own plan, you have the choice to choose the level of coverage that fits your personal and family needs. And you're not stuck to what your employer, the generic plan your employer has for you. A very good example is, say you have a medical cover through your employer and you feel the limits are so low or the insurance coverage they've given you does not cater for some hospitals. What you could do, you could get your own plan, your own medical insurance that you can choose the level of coverage you want, and you can pick one that actually offers the doctors or the hospitals that you want, right? And another thing is, say, for group life is usually constrained up to maybe 3 to 5 times if your employers are very generous. But most of the time, this level of coverage is not enough. Usually the rule of thumb is for you to have 10 times worth of your income for your life insurance. So if your employer only offers 3 times this income, then it means that you have a huge gap. But then if you plan and get your own life insurance, you can actually get one that matches your needs, your family needs. You can control the level of cover. You don't have any back and forth. You don't have to go through HR. This is just for you. You make the decision. You call the shots, right? And then also for something like pension, sometimes maybe the amount that is being contributed might not feel enough, or maybe the people who your employer have chosen as the fund managers, the fund is not doing so well. So you can choose, instead of your contribution going towards your employer-sponsored pension, you can choose to have your own personal pension plan where you can actually choose a pension plan that makes sense and is giving you great returns. So flexibility and ability to make that choice is so important, because it means no matter what, this is something that you'll always have in your pocket and your employer has no say in it. Number 2, we have portability and stability. As we have said, life changes. Today, you could be employed and tomorrow you want to be an entrepreneur. today you could be employed and you get a baby, you want to take a sabbatical, or today you could be employed in this company and you need to change companies. Maybe company B is giving you a much better salary, but the benefits are not that good, or maybe they don't offer as great benefits as your former company A. So what happens in such a situation? Having your own benefits ensures continuity, because remember, having your own benefits is not dependent on any employer. So as I had mentioned, something like pension. Yes, it's important to have your own personal pension through your own employer-sponsored pension. We're going to be grateful for it. But it's also equally as important to have your individual pension plan, so that when you move jobs, you can easily transfer from your employer-sponsored pension into your individual pension pot. That means that you're very flexible. You can move around with it. Because what we see happening a lot, today you're working company A, tomorrow company B, company C, and you're leaving all your pension in all these different companies with the different fund managers. So by the time you're like, oh my goodness, I need to actually consolidate my pension, you have to go and reach out to like 7 different companies. So what I would advise you, especially when it comes to pension, have your own individual pension plan. And then when you're moving employers, or you're moving into now self-employment, or you now have a business, you can easily transfer from your employer-sponsored pension into now your individual pension plan. And the good thing is transferring from this employer-sponsored pension, when you're no longer working there, to your own individual pension plan, is free. So we do help a lot of our clients, especially in that space, because it's something that happens, especially this day and age where people change jobs every 2 to 3 years. It's important to have your own individual pension plan. Something like group life. Group life is not portable. You only get the benefits when you are employed. So it's also equally as important to get your own life insurance. Because remember, today, actually, when I think about it, we had a client who had a good job and she had her group life benefit. Then she got another even better job. And this place had no group life. So she was in a state of panic, because now she was way older. She had been working for this company for 15 years. Now you have to move to a new company. And life insurance is dependent on age. And she didn't want to move from one company to another without having something as crucial as a life cover. So in such situations, I would advise, the moment you get your first job, just get life insurance, something that you can call your own. Because when you move jobs, you move the life insurance because it belongs to you. It does not belong to the employer. Even if you had such great group coverage, it's good to always remember, it's not for you. It's not yours. It belongs to the employer. Today, if your employer is broke and they're like, you know what, we need to cut down on expenses, they can cut out the group life and there's nothing much you can do, because it is at their discretion. They are the ones who are making the choice. But if you have your own personal life insurance, it means no matter what they do, your employers, whether they choose to continue this group life, they do not choose to, you can still move with your own life insurance. A very common question is, can I still get my own personal life insurance even if I have one through work? Because can you have, 2 life covers? The answer is yes. You can have multiple life covers. So yes, you can have this one which is offered by the employer, and you can additionally have your own personal plan. So portability and stability is so important. And then the other thing is also, medical, as I'd mentioned. When you know that you are about to transition, or you have been thinking about it, and you know what, I don't think it's working out here anymore, that is the best time now to actually get a medical insurance. You can even start with something simple as an inpatient cover. So by the time you're leaving, the waiting periods have been waived, they're already over, and then now you're not transitioning from no medical insurance to, from medical insurance to no medical insurance. It's going to be a very smooth transition, okay? And when you're putting all these things collectively, it means that you have that peace of mind that no matter what, you're good, you're stable, you do not have to go and answer to anybody. Number 3, we have the diversification of your retirement savings. Again, when it comes to employer-sponsored pension plans, it's at their discretion. They choose the fund manager and they choose what fund and the level of risk that they're willing to take. So a lot of employer-sponsored plans, usually the risk level that they tolerate is very, very low. This is how you can find that the fund is not growing as fast as maybe some of the fund managers out there in the market. So if this is the case, it will then be important for you to have a separate plan for your retirement so that you can make sure that when you retire, you're actually retiring with enough money. It's not good enough to be comfortable with what it is that you have. It's good to go back to the details, ask for your statement, and then let your advisor guide you, your own personal advisor, on if this amount of money will actually be enough upon retirement. We've been able to help a lot of our clients with that because we are able to predict upon retirement, if you choose to retire at the age of 65, based on the amount of money that will be accumulated up to this stage, you will be able, say, to retire with 100,000 a month or 150,000 a month. So say we find that the amount of money you're going to retire with is not enough and it might be very strenuous to you financially, or you might have to, go to your children to boost you, then we can have your own plan on the side, your own retirement plan on the side to make sure that you have enough at the very end. So one, you could have your other extra pension plan, which is giving a much better return. And number two, you can now put your money or your retirement savings in other asset classes, which are able to give you a much higher and a much better return, maybe compared to a pension plan. Because again, when you're thinking about retirement, pension is only one way of looking at it. It's only one tool, a very crucial tool, a very important tool, because at least it ensures that there's going to be this amount of money every single month. But it's also equally as important for you to be very comfortable to have additional asset classes or additional investments that can be able to give you better returns that you're going to use upon retirement. So sit down with yourself or sit down with your advisor so that we can be able to check it out, structure your retirement plan accordingly. Number 4, we have supplementing gaps. A lot of employer-sponsored plans may not be very comprehensive. Yes, they do give quite a bit of benefits, but it may not be enough. So what is important to look at your own personal needs and say, this is what it is that I need for me and for my family. And then this is what my employer is offering. So where exactly are the gaps? So if it's with the medical insurance, you feel that the amount that they're giving you is not much, get your own medical insurance to fill in that gap. Say your employer is only giving you 2 million shillings inpatient coverage and you feel that that is not enough for you, you need 10 million. You can get your own cover for maybe an extra 5 million or your own whole 10 million shilling cover. Just for that peace of mind, knowing that, okay, if I was to fall sick, at least if the first amount I will use, yes, is my employer-sponsored plan, but then I have backup just in case, because a lot of our employer-sponsored plans are not that much and are not that comprehensive. Secondly, as I'd mentioned earlier, like life insurance, they only give you, say, around 3 times your annual income, but the ideal is 10 times. So it will be important to close the gap, get your own life insurance so that in the case a death was to happen or a critical illness or a disability, your employer amount of benefit will be paid out, yes, but you still have your extra level of protection. So it's important, as I said, to go back to the drawing board and not be too comfortable. Always go check your statements, your retirement statements. Always ask for the documentation on what exactly it is that you're covered for so that you can know, okay, this is covered, this is not covered. These are the gaps, and this is what it is that I need to do or to buy to fill in the gaps. Again, you can do it yourself or you can get an advisor like us who are specialized in this area to be able to help you. And number 5, we have personalized estate planning. In addition to having these benefits, it's important to have a plan where things and matters can be done according to your wishes, the distribution of your assets or even of your benefits. So having your own personalized estate plan gives you that flexibility to give your family even extra level of protection. It's much easier to now choose your own beneficiaries, more flexible in a way that you can create a structure that things are going to be done your way. It might not be as flexible with your employer benefits because there are some things which they might allow, some things not necessarily. But if you have your own benefits, you have all your other assets, it means that you can structure an estate plan that is going to go according to your wishes. So your estate plan means the things that are going to go into your will or into the trust so that it will benefit your children, your spouse, your children's children. So even as you're planning and putting your matters in order, it's important to put into consideration, this is happening right now. Yes, I'm making this money. Yes, I have these benefits. But what happens when the time comes that these benefits actually have to reach my family? So how is it that I can actually put a plan in place to be able to ensure that it is done as smoothly as possible? Again, make sure that you get an advisor if this is an area that you're not very conversant with, to be able to help you structure an estate plan that makes sense for you. We also help our clients in structuring their estate plans. It's something that we do with so much joy, and it gives us that peace of mind that also their different families that are coming to us have a whole rounded wealth plan, a proper framework to make sure that yes, they are protecting, but equally they are going to distribute these assets, these benefits according to their wishes. So what next? You have realized that you only depend on your employer benefits. Now you want to create your own benefits. What are the steps that you can actually take today, now, to start building your own benefits from scratch? Number one, it's important to assess your needs. It's good to now take a step back, choose a specific day where you're going to look into your finances to see, okay, this is what I need. These are the goals that I want to achieve. This is the level of coverage it is that I need. This is how I want to retire. So you assess your needs in that way. You look at yourself, you look at your family, because remember, you are your own responsibility. Your employer's responsibility is to the company that they work for, right? So it's important to note that you are responsible for your own finances and your family finances. So after checking and saying, okay, this is what it is that I need, and then this, you go now back to your employer benefits, ask for all the documentation they should be able to give you. Ask for your statements when it comes to your pension. Ask for maybe a breakdown of the benefits for medical. Ask for the breakdown of benefits also for group life, just for you to know exactly what is covered. That is number two. Then do the difference so that you can be able to see what are the gaps that I have. That is step one. Step two is now to research what are the best options for me. So I have seen that these are the gaps. So what can I do, or what are the right products to fill in this gap? So you can do this by yourself, but I would advise you to just use an advisor, to get someone who is good at this to be able to guide you so that you do not let anything pass you by. So you will be helped now when it comes to now looking and sourcing for the plans that it is that you require at this point. And then lastly, you just do the implementation. You get started. So your advisor should be able to tell you, based on where it is that you are at now, we can start with, say, an emergency fund. Or your medical insurance is really, really good. We don't necessarily need to add any more. Okay? Or your group life, yes, is good, but is not enough. This is what it is that we need to do. At that point, you can be able to start in order of priority the benefits it is that are required based on what your advisor tells you. So again, number one, assess your needs. Number two, research the different options. And number three, implement. Let me tell you, having your own benefits, having your own protection plan will just give you that extra confidence when you're going about your day-to-day at work or even at home. You know that even if today you are to lose your job, even if tomorrow you are meant to transition into now maybe being a stay-at-home mother or an entrepreneur, you have a backup plan that is not fully dependent on the employer. This is a must-have. It's not just a good to have, it is a must to have your own plan aside from what the employer gives you, so that you can always have that extra bounce in your step, knowing that no matter what happens, I'm good. A lot of us stay in jobs sometimes we do not necessarily like, or we feel that we are not growing because of these golden handcuffs, the benefits. So having your own benefits gives you that freedom, knowing that you can always move whichever time it is that you want, or if things are not working out, you can just take a step back and be able to go back to the drawing board and see what exactly it is that you want for that season. And for this big reason, it is important to have your own plan. If you found this video useful, please give it a thumbs up. Make sure you share it with the other friends who are also employed, because this could be something that they find extremely useful. And I can't wait to see you in the next video.